Defining impact investing is actually quite difficult. You've got some people who associate it much more closely with philanthropy, and then there are those who associate it much more closely with traditional forms of for-profit investment. But I think that any social impact investment has three key features. The first of those is that it's an investment into a business. The second is that business has at its core and at the forefront of its values making an appreciable and measurable social impact. And the third is that there is a financial return for the investor. Impact investing is actually quite distinct from both philanthropy and ESG. Taking philanthropy first, the two key differentiating features really are the nature of the recipient entity, and the nature of the return for the investor. So with a traditional philanthropic investment, the recipient entity is usually a charity or a foundation and some other kind of not-for-profit. Whereas with impact investing, really you're investing into a business. And then in terms of the return for the investor, with a philanthropic investment, the nature of the return is, it's largely emotional. It's a one-way financial donation or transaction, if you like, and the investor is looking to get back a sense of well-being, knowledge that they've contributed to an important cause, and in some cases a more longer-term investment could be anything leading up to a legacy for that philanthropist. The return on an impact investment is twofold. The investor hopefully gets to have all of those slightly softer sides of the investment as well, the benefits of those, but they also, and crucially, will be getting a financial return as well. And then just briefly on ESG, I think of those as ESG being environmental, social and governance. I think of that as being very much a set of parameters that you might put around an investment. So saying, I want to only invest in companies with a high ESG rating. There are three core reasons for this. I think the first is that in the last sort of 10 years, people have realized that just because you're making an investment into a company that is out there to do social good doesn't necessarily mean you can expect a poor return. People have realized that actually these investments can be quite lucrative. I think if you couple this with the timing of it, in the last 10 years, we've seen this shift in society away from people wanting to make profits and returns at any cost and focusing increasingly on the ethics around business. And then if you add into that the third limb, which is that the next generation, compared to the incumbent generation, view the world in such a different way, and their priorities are so focused on living in a more sustainable way. I think where it's really interesting for families and family businesses, where you've got this kind of cross-generational profile of individuals involved and different value sets and different priorities on investments, it can, or it might just provide the ideal marriage between an investment which is for profit, which grows and develops family business, family wealth, creates a legacy because the investors will be involved in the business going forward as much as they might like to be or not, and it has crucially that element of ethics